皆様こんにちは。ドバイのマクシャラフ証券です。本日はリサーチ主任のイアン・ムンローにより、なぜ UAE で投資なのかについて説明していただきます。それではよろしくお願いいたします。
こんにちは。私はイアン・ムンローです。Today I'm aiming to give you an overview of the three markets in the UAE, how to invest in these markets and why to invest in these markets. There are three markets in the UAE: the Dubai financial market, the Abu Dhabi stock exchange and the Nasdaq Dubai market. The largest market is the Abu Dhabi stock exchange. Its market capitalization is $69 billion. The DFM is the second largest market here in the UAE. Its market capitalization is $59 billion. Banking and finance is the biggest sector in the UAE. The second biggest is property and industrials, and then after that smaller segments of telecoms, utilities and other parts of the economy.
Okay.
So why invest in the UAE? Over the last decade, the UAE economy has expanded rapidly. Property developments, infrastructure projects and lots of government spending have fed back into the economy and into corporate earnings and equity valuations. At present, there are US dollars 290 billion worth of projects under construction in the UAE. This is half what was under construction 12 months ago before the financial crisis, but in either case, it highlights just how strong the long-term growth projection of this region is based on infrastructure and property projects. Dubai has been affected by the financial crisis. You've probably read in the papers and in the media about debt of property companies, housing prices falling and government problems. But however, despite these reports, petrodollar linked investments, ongoing government spending in infrastructure and property, and the fact that equity prices are so low means that now is an excellent opportunity and time to look on the UAE markets. Governments have responded strongly in the UAE to the financial crisis. Similar to other governments around the world, we've seen money and liquidity flowing into the banking sector, we've seen tighter regulations, and we've seen support for industrial companies. Looking forward, we think that ongoing investments by governments into property and infrastructure projects, in addition to the flow of funds from oil and also tighter regulations and foreign investment, will mean that the UAE remains an excellent place for companies to do business and to expand their operations. This flows through to the companies that are listed on the UAE exchange, and we expect earnings to grow and share prices to rise. So, to put all of these points in perspective, why Dubai is a good place to invest, first point is Dubai has high oil reserves. Approximately 8% of all of the world's oil is located in the UAE. This means that as the oil price increases, and we've seen the oil price increase to over $66 per barrel today, the flow of revenue and earnings back into the corporate sector here in Dubai and the UAE in general is very strong. The second reason is that Dubai is strategically located between Europe and Asia, making it a hub for international trade. Increased imports and re-exports all flow through to economic growth in the UAE, and there remains several companies listed in the ports and shipping space where we believe investors should put their money. The third reason to invest in the UAE is that population and demographics are very favourable. Unlike many parts of Europe and the United States, the UAE has a very young population. This means that the growth of the population as the young people grow older and get new jobs and spend more and buy houses, the flow-on effects long term are very favourable. And as a place to live, Dubai and Abu Dhabi are more liberal than many GCC countries, meaning that more people want to come here and live and spend money and develop houses, which all flows through to corporate earnings. From an investment point of view as well, Valuations in the UAE are very cheap. On a price to earnings multiple, Abu Dhabi market is around 8.5 times PE, whereas the Dubai market is 6.5 times PE. This compares very favourably with valuations in Europe and America, where PEs are 14 or 15 times earnings on average, and therefore more expensive than the UAE. On the investment markets during 2009, volumes traded have increased significantly. Volumes during March, on average on a daily basis on the DFM, were 300 to 400 million dirhams. This has increased to 400 to 500 million dirhams during April, and then now during May to date, the volumes have increased to 700 million dirhams. Increasing volumes and more foreign investment flow bode well for local equity market valuations, giving investors excellent opportunity to buy and sell and make gains on the local stock markets. So to summarise, we believe that investors should be looking at the UAE markets because it is funded by oil prices and petrodollars, by strong long-term government spending, by favourable demographics and rising population growth feeding through to a stronger economy, the fact that price to earnings valuations and equity valuations are very cheap here and likely to rise strongly in the next 12 months, and finally because volumes are already picking up and there are strong signs that equity prices will rise and deliver returns to investors over the next 12 months. So at Max Sharaf Securities, our job is to analyse companies on your behalf and find out where are the best companies to invest in and how can you make the most money. So from a fundamental point of view, we look at companies' financial reports, their management team, we look at their business strategy and the industry they operate in, all to come up with the best recommendations for you to buy, hold or sell and take profits. In coming editions of this briefing, we'll describe to you exactly which companies to invest in across all three markets in the UAE and give you updated commentary regarding the performance of these companies. Until next time, happy investing and domo arigato, mata jika ni.